Hello, my name is Jay Schwartz and I am the Iceberg Realtor. Welcome to my year-end St. John's and metro area market analysis for 2022. Today, we'll be taking a deep dive into the local market and examining a range of statistics and trends. We'll be looking at factors such as home prices, sales, inventory, and demand. As well, we'll be looking at economic conditions that may influence the market. At the end of the video, I'll give you my predictions for 2023 and where the market is headed so that you can make better real estate decisions. All right, let's get started. So firstly, I'd like to establish where all this data is coming from. I'm getting it from our local MLS system, and it's all coming from the area that you can see on this map that is in the dark circle. This is primarily the St. John's metro area, which includes the cities of Mount Pearl, Paradise, and Conception Bay South, and a bunch of other smaller townships. The first set of data that we're going to take a look at is the active listings over the past 5 years. This can give us insight into the supply and demand dynamics of the market. A high amount of listings generally means lower home prices and better negotiating terms for buyers. A low amount of listings means higher home prices and potential bidding wars and less desirable terms for buyers as well. So we're going to start off by just looking at 2022, which when looking at this graph looks all right, seems fine. We cap out at about 2,400 listings in what looks like July. But when we start to add in the previous years, the bigger picture will start to reveal itself to us. Here we have 2021 is the blue line, and you can see that it was quite a bit higher than 2022. So we are currently trending down, and you'll see they both take a similar arc, and this is the cyclical patterns found throughout the year and the seasons. Let's add in the rest of the years so that we can see the bigger picture. All right. So there is one dark blue line kind of going through the middle there. That's 2017. But the trend that we are on now starts in 2018 with the orange line at the top. And that is the highest amount of listings that we've seen in the past 5 years. And then every year after that, sequentially just kind of goes down. 2019, the gray line, a little lower. 2020, significantly lower, and that was obviously affected by the pandemic. Then we have 2021, which overall is lower than 2020, but had a little boost when we came out of the pandemic. And then we have 2022 seeing the lowest amount of listings overall. And this is going to lead us into our next set of data. We're looking at months of inventory, and I've included the data with this one so that you can see the exact numbers. Inventory is the comparison of the number of listings against the rate of sale. The level of inventory is basically if no new houses came on the market from this point forward, and the rate of sale continued where it is currently, in how many months would we be out of homes to sell? That's how you got to look at it. Here we can see that the level of inventory has been consistently declining, much in the way that active listings has been declining. There is a little spike in 2020, and that would have been from buyer activity decreasing dramatically when the pandemic began. To me, this overall indicates that buyer interest has remained strong while there have been fewer sellers. Now, if we focus on the data at the bottom here, we can see that since March 2021, buyer activity has been up and the months of inventory has been low. It's remained pretty stable up until the time of this video. It has remained between about 6 and 8 for the most part, with one exception being February of this year, which saw 10 months of inventory. So you'll begin to see the seasonality of the market and how that has an effect and how it can benefit you depending on what your goals are, whether you're buying or selling. Let's have a quick look at the number of sales month by month from the past year. Here we can see the seasonality of the market on clear display. The summer being the most active and the winter being the least active. What's interesting to me is that we're actually seeing some market strength this December, finishing the year stronger than we started in January, which is contrary to what most people are expecting at the moment. Moving on, in this chart, you're really going to see the advantages of that seasonality. This is the average sale price versus average days to sell. So the blue line is the average days to sell, and that correlates with the right axis of numbers. You can see it's 0 to 90 there. And then the orange columns correspond to the left axis, which is the dollar values. You can see for the most part that when the blue line is higher, which means the average days to sell is greater, the home price is lower. And then as the average days to sell comes down, the home prices go up. To me, this is a great indicator of market strength. Anytime that those orange bars are above the blue line, that means demand is high and sellers are definitely taking advantage and making more money. Here in December, we can see an exceptional month. Knowing that there were more sales, higher average sale price, and a medium amount of days on market, I would conclude that the buyers this December have been more serious than usual. This could be in anticipation of the rising interest rates. People are trying to get ahead of it, and it's not a bad strategy. I'd actually, if you're thinking about buying, I would recommend sooner rather than later. Now, in general, what I would take from this data is that if you're a serious buyer, you may want to take advantage of those slow winter months to get better negotiating conditions. And if you're a seller, I would list at the end of May to take advantage of the high season and potentially get the most for your property as possible. Now we will compare the sale price versus the close price ratio. The close price ratio is the measure of the difference between what the house was listed for and what it eventually sold for. It is expressed as a percentage. So, for instance, if I was selling my house for $100,000, but I only got $98,000, the close price ratio on my home would be 98%. So this ratio can help us understand the level of negotiation that took place between the buyers and the sellers of any given time period. 100% is actually quite rare, and you can see in June and July that we did in fact hit 100%, which means that in some cases homes were selling for well above asking because this is the average, and there will be some that sold below asking. In general, if the closing price ratio is low, that means the market is competitive and buyers are able to negotiate lower prices and better terms. Starting at about 96.5% in January, the close price ratio only strengthens throughout the rest of the year. I would say that we are in a strong market for sellers and that there's very little signs of it shifting to a buyer's market. Now, looking at this, if I was a buyer, I'd be looking January, February, March as the best months to buy. And if I was a seller, I would definitely be looking at June and July. It's even more evident in this chart than the last one. Finally, we're going to look at the sale price percentage since the beginning of the year. Using January as our baseline, we can see that that is our 100% mark. It's obvious that the prices of homes have continued to rise throughout the year. Newfoundland has seen an average home sale price increase of 6.6%. We can see here that St. John's metro area has seen an increase of 19%, which is no small amount. Again, we see December performing exceptionally well, with the home value being the highest. And to me, that's signaling a very strong real estate market as we head into winter and 2023. All right, so we're going to move on and we're going to look at some economic factors so that we can start to predict what's going to happen in 2023. So this is the population of Newfoundland starting in 2001. This graph is from Statistics Canada. So we can see that Newfoundland's had some fluctuations, and starting in 2021, there's a trend reversal and our population is increasing. Looking at the end of 2022, we are still on a steep incline. So as far as we can tell, we haven't peaked yet, and the trend is neither plateauing or reversing. And why is this important? Well, population puts upward pressure on home prices. The higher demand there is for homes, the higher the prices are going to be. And why is the population rising? Well, we need to consider the current immigration policies and the acceptance of Ukrainian refugees. And neither of those things are slowing down, so there is no reason to believe the population growth is over yet. How long will it continue? I don't know. I do believe Newfoundland is going to hit a new record high population, though, on this upswing. So we'll see what that brings for us. All right, moving on. This graph is from Trading Economics. This is a graph of consumer confidence in Canada, and we need to take this one with a bit of a grain of salt. This is a little bit more abstract. It's not built on actual raw numbers, it's built on emotion. They do ask consumers 11 different questions to determine their confidence levels, and then we end up with what we see here. So this graph does show that consumer confidence is trending back to normal levels. Down here in 2022, near the end, we see a little dip, and then we see the incline rising as we're coming to the end of the year. If we use 2018 as our baseline, sort of where normal confidence levels are, between the 50 and 55 range, you can see we're just below 50 and coming back up into that normal range. Obviously, there's that huge dip that came from COVID-19. Yeah, confidence shattering. And that brings us to the elephant in the room, which is interest rates. This is the number one factor working against the strength of the real estate market at the moment. This is what everyone's talking points sort of come back to. When interest rates rise, it becomes more expensive to borrow on a mortgage. In theory, this will discourage buyers, reduce home sales, which could lead to lower home prices. However, the interest rate hikes that we have experienced recently have had little to no effect on the Newfoundland market. They have, however, had an effect on markets such as Ontario and British Columbia, which had insane increases in home values over the past few years. So this chart is from the Bank of Canada, and you can see that the first rate increase was in February of this year and has continually risen since. But considering the other data we've already looked at, I could say that if I put a real estate market strength graph over this, they would sort of run up on a very similar trajectory, which theoretically they should not. Absolutely. Now, another thing I want to say about interest rates is that in 1991, Canada had its record high interest rates of 16%, and people were still buying homes. Like, the interest rate does affect the mindset of buyers, but depending on how motivated they are, they're going to buy a home anyway. People need to live somewhere, and they need to make the decision whether they're going to rent or buy. And for a lot of people, depending on where they are in their life, they want to become homeowners. The last thing I will say about this is that while the rate rises, if home prices were to come down, they would counteract one another. Although the home is cheaper, it becomes more expensive to take out a mortgage. So the risk here for home buyers is waiting. While the rates rise, if home prices were to come down, they would sort of counteract one another. You know, even though the home value is lower, your mortgage rate is higher. So you're still losing out in a way. If home prices continue to rise while you're waiting and hoping for home prices to come down, could end up being extremely expensive. You might end up in a situation where you might not be able to afford as much home as you had originally intended. Looking ahead to Newfoundland's future, this comes from the Conference Board of Canada. These are their forecasts. These are by no means fact, but we do know oil production is down at the moment, but there are new projects on the way, including the Beta Nord project, which means more jobs and more money coming into the province, which this province desperately needs. I hope the government takes this money and thinks about the future, though, which it seems like they're starting to think about, because we also have wind energy projects coming, which is also going to create jobs and hopefully affordable home energy for all of us. And they're predicting a GDP increase. And the Conference Board of Canada is predicting a global... GDP. And the Conference Board of Canada is predicting an increase in our GDP by 2.9%. So overall, Newfoundland is entering a growth cycle. Before I get into my predictions for the coming year, this is where I ask you to please like, comment, and subscribe to the channel. It keeps me motivated to continue making informative content about Newfoundland for you. So my personal prediction for 2023 is that the real estate market is actually going to keep strengthening, and inventory is going to stay low. I don't know where it's going to plateau. Hopefully it doesn't go lower than it is now. But as you know, more buyers are coming into the province day by day at this moment. Unless there was some sort of massive home development project that started to counteract that, I don't see that changing. So again, with the immigration and the increased interest in Newfoundland since the pandemic, Newfoundland's population is going to continue to grow. It looks like our GDP is going to continue to grow. Consumer confidence in all of Canada is on the rise. Newfoundland is set to be in a better economic position than it is now. And with the steady demand of housing, I don't see this market cooling off anytime soon. I know that's contrary to a lot of what's being talked about out there, but this is, I just went over the numbers with you. This is how I see it. All right. Thank you. Hope this video was informative, and have a great day.